Hi everyone, I'm Glen Gillespie. I'm from Better Mortgage Management, and my role here is as a business development manager, focusing on the Queensland, South Australian and Northern Territory markets. The focus of our presentation today will be how to use BMM's exciting new comparison calculator for alt-doc and specialist loans. This calculator has been developed after feedback from our brokers to try and make comparisons of the specialist and alt-doc type loans less confusing for them and also provide them with a greater compliance tool. So firstly, how to access the calculator is pretty simple. You don't need to log on to our website as a broker. It can just be accessed through our homepage at bettermm.com.au. From there, you just click on the Resources tab and then click on the Alt-Doc Specialist Calculator, and it should come up. Now, before starting, you will need to know the rate and risk fee that may apply to the product. And if comparing non-BMM products, you'll need to know of that lender's establishment costs. For BMM products, it's pretty easy. The information is pre-populated on the calculator. So in this exercise, we'll begin to compare 4 products. 3 will be from BMM and then 1 other. So let's begin. First, we'll need to select the right number of products. Since we're only comparing 4, untick the box under product 5. This will disable the column and the text turns to grey. Next, we need to select our products. So to do this, click on Product 1 and either search for the product or scroll down through the product list. For our exercise, let's pick the BMM Capital Specialist Loan. Repeat this process for the remaining 2 products and leave Product 4 as our comparison. Once you have all the products you want to compare, go to the first product column, enter the loan amount, and then press Enter. Notice how the loan amount has automatically populated the other 3 products. Continue down and enter the property value, and this will automatically generate the LVR. For each product, select the risk fee capitalization. For our exercise, we're going to pick Yes for product 1 and 4, risk fee paid at settlement in product 2, and risk fee to be paid from loan proceeds in product 3. Under product 2's risk fees, where it says also risk fee LMI type, let's change that to a percentage. As you can see, the fees for each BMM product are automatically generated. However, we will need to manually enter the fees for the other lender's products. So let's make the establishment fee $550, $330 for the valuation fee, and $440 in legal fees, which is pretty standard sort of amounts for this type of product. Under risk fee LMI, enter a risk fee in either dollar amount or percentage, based on what you choose earlier. For our exercise, we're going to give product 1, 2, and 4 a risk fee of $4,000. And give product 2 a risk fee of 1%. Enter the interest rate of each product and give product 4 6.29% as its interest rate. Click on P&I or interest only. Change product 2 to interest only and select the interest only appropriate period. In this case, let's make it 5 years. If any of the BMM products have ongoing costs like annual fee or monthly account keeping fees, they will automatically be populated in ongoing costs. For comparison products from other lenders, all fees associated with the comparison product will need to be manually entered. Now that we are happy with the products of our exercise, let's put this calculator to work. Scroll down the page and click Calculate. You will see the product with the lowest total cost highlighted in blue, whilst the product with the lowest total cost plus payout figure is highlighted in green. Now let's say we want to change this calculation. Maybe your customer wants to try a shorter interest only period. For our exercise, we will change interest only from 5 years to 3 years. Have a trial at changing some of the contents of this calculator. You should notice the figures change and sometimes the highlighted fields will change. Let's have a look at the loan proceeds available at settlement. Will your customer have enough to settle the purchase or to effect a refinance? Note that for loans where risk fee is capitalised onto the loan, the calculations are increased. Try changing assumed payout. Scroll down the totals and change one of the assumed paid out times to 15. Another optional feature is the equity calculation. If we assume an increase of 2.2% per annum, what will happen to your customer's equity? Of course, values could go up and down in the future. So let's say it goes down 0.3% per annum. If you want to calculate this, enter it as a negative value. The shaded area in this instance indicates the product that offers the best equity for your customer. With the desired answers now in place, you may wish to print this for your record or email it to the customer or loan writer. So this is where it can really help your compliance as a loan broker. Scroll to the top of the page, you will see a print and email icon. When emailing, you can enter the subject of the email and any notes you might see as appropriate. With the knowledge you are happy with the product, you can obtain a BMM application pack. This is found in resources. Of course, you can contact me, Glen Gillespie. I am a BDM for Queensland, South Australia, and Northern Territory, or of course one of our other BDMs. So that's our super simple AltDoc Specialist Calculator. Don't forget to subscribe, like us on Facebook, and join our mailing list. So this has been Glen Gillespie from Better Mortgage Management, where we offer you better service, better products, and better rates. Thank you.